spicy question from Ken H is up next.
Question.
Get ready. Buckle in. I am on the 6th year of a 6-year car loan. The interest rate is 3.99%, but the effective interest rate is much less due to time. Should I pay this off or let it ride?
6th year on a 6-year car loan. Is that what he said?
Yes.
So he probably doesn't owe. He's making it sound like he doesn't owe much.
I mean, he can if he's in the 6th year,
I mean,
right?
I would assume.
He can't owe a lot on it.
I mean,
And so 3.99%. Yes, pay. My opinion, pay it off. Why do you have? Tell the folks, because maybe the people don't know us and they haven't like watched a ton of our stuff. When it comes to buying a car, do we think that 6-year loans are the way to go?
no, we're all about the 23.8. And what we
23.8.
mean by 23.8 is that you put 20% down, you finance no longer than 3 years. Why? Why 3 years? Why didn't we do 6 years? Because we're trying to make sure that your eyes and egos doesn't exceed what your wallet can afford. So if you do a 3-year loan, that amortization is so short, it keeps you ahead of depreciation, but it also makes sure that you don't get out ahead of yourself, because then you're limited by 8% of your income. So Ken, just because you broke a rule and now the interest rate environment has made it where you feel like you're getting away with something, you still broke the rule and you financed a car that depreciated. I mean, what's that car worth now? It's probably not worth a ton. Just pay it off. It's not worth the hassle factor. It's probably not enough money to even be worth the discussion on this. We probably have now, if you know what your time is worth, we've already exceeded the savings that you're getting, or even the arbitrage opportunity. Because what are you going to do if you owe like $3,000 on a car? You're going to say, well, I go put that in a money market making 4.5%, so I'm making a lot of money.
Since he's in the 6th
Pay it
year
off.
of the
You broke a
6-year.
rule just because interest rates are a little bit higher on that one. That's not something that we're going to reward you for.
No, I just don't think that if you're someone who's having to buy automobiles and using these longer term loans, I'd argue you're just not looking at the right automobiles, right? It's not where you need to be. We say that if you're going to buy a car, you talk about 23.8. Well, another thing we say is, what if you want to buy a nicer car, more expensive car, takes longer to pay off? We would argue if you can't pay it off within 1 year and it's a luxury type brand, we got a whole video around what we define as luxury, then you can't buy that car. If you can't afford to pay cash for it immediately, you can't do it. So 23.8 is supposed to be the bridge that gets you from where you are today to where you need to be in the future. It's not supposed to be something that gets you 6 years down the road.
Yeah, think Corolla, not Land Cruiser, as I like to say. And here's the thing. If you think that you're taking advantage of something and to your benefit, the only person that you're hosing over with exploiting 23.8 is yourself. Because the reason we have the final rule of 23.8 is that your monthly investments must exceed what your monthly payment is. So the fact that you had to go out to 6 years means that you had to spread this thing out. I'd have liked to have kept you a little more humble and honest with a 3-year loan to see if it was still the same car, or if maybe it did fall back down to a Corolla-esque type car, that safe, reliable, good car, and then you were able to hopefully load up all the investment accounts on the other side of it. Because that's really what these rules are about. Get you to step 8 of the financial order of operations, so that then you can pay for cash for that luxury car and all the other things you aspire to.
Yep.